So today's agenda, as you all know, is we're going to be deep diving into capital gains and taxation, and we'll give you some insights on how MProfit helps, and we'll also go into detail about how your capital gains are taxed across different asset classes. So today the goal is only to focus on capital gains, tax PNL, and how MProfit can help. The agenda for today will be, first we will showcase to you MProfit's capital gain reports. Uh, we'll show you what kind of capabilities MProfit provides to simplify and streamline your capital gain report preparation, including factoring in all the latest ITR rules, various computational complexities like corporate actions and some other things. Then what we'll do is we'll go into detail for each asset class, what the key income tax rules are for that asset class, like stocks, mutual funds, bonds, REITs, InvITs, sovereign gold bonds. So we'll cover each asset class separately. We'll talk about the long-term and short-term rules for their asset class and how you can generate that corresponding capital report in MProfit. Finally, after that, we will talk about how you can use some of our unrealized gain loss reports for tax harvesting purposes. As you know, the financial year is soon closing, and I'm sure some of you want to book your short term losses to offset the long term capital gains. So we will go into detail on how you can go about that. So I think Tanmay, without further ado, without further delay, you can jump into MProfit's capital gain reporting capabilities and you can share your screen. Thank you so much.
Thanks a lot, Atik. Thanks a lot. So before we go into a detailed asset-wise capital gain discussion, I'll just briefly show you which different reportings we have for our capital gains. So as you know, we have capital gain reporting. So on the left side, I've selected an individual portfolio and I'm going to report section. We provide very comprehensive capital gains, as you can see. So for you get a summary report also, ITR format, Schedule 112 ITR format. And for we provide basically unrealized capital gains summary and detailed both the formats. So currently capital gains are supported for stocks, mutual funds, that is equity, debt, hybrid, InvITs and REITs, traded bonds. We'll cover each one in the detailed also. And along with the standard capital gain reporting we also provide tax software formats. So if you are using any of the tax software portal like ClearTax, or if you are giving capital gain reporting to your CA to file the returns, and if they are using any of the tax software such as Winman, CompuTax, Spectrum, Genius, Tax Pro, we provide ready-made reporting. So when we say Winman capital gains ITR format, the Excel template is exactly like a Winman, what Winman is currently supporting. So this is the detailed capital gain reporting we provide, and also with the specific tax software formats. We are continuously adding different formats here. Even if your format is not supported, you can send it to us and our team can review it. And we can look for adding that particular tax software format report. So I guess, Atik, we can start with the detailed view. We can go asset wise and then we can explain in more detail.
Yeah, sure, Tanmay. So you can switch to the presentation.
Sure.
Great. So we'll start asset-wise now on what the taxation rules are for each asset and how you will go about computing the capital gains in MProfit. So we start with stocks. That's the most popular asset class for MProfit. So as you all know, this is not new knowledge, but we'll just cover it nonetheless. For stocks, the short-term capital gain and the long-term capital gain tax both are applicable with a 1 year time frame. So if you sell an asset, if you hold an asset for less than 1 year, your capital gain liability will be short-term, and if you hold it for longer than 1 year, it will be long-term. The short-term capital gain taxation on stocks is 15%, and the long-term capital gain taxation on stocks is 10%. But as you know, that for long-term capital gains up to 1 lakh rupees are exempt from taxation. So you will be liable to pay tax on any gains earned over a total gain of 1 lakh rupees. Secondly, an important point to note for stocks is that the long-term capital gain grandfathering clause is applicable on your stock investment transactions. Now, what is the long-term capital gain clause? Many of you already know, but just to cover it again, uh, there was a clause introduced in 2018 wherein a long-term capital gain tax was introduced of 10% on your long-term gains held over 1 year and higher. And what that does is essentially it makes sure that your gains before 31st Jan 2018 are grandfathered. This essentially means that today, if you sell a holding which you have held prior to 31st Jan 2018, you will have to properly account for the grandfathered gain on that holding. And that you will have to gauge by finding the fair market value of that stock on 31st Jan 2018. And you have to see what the corresponding cost of acquisition is vis-a-vis the market value of that share on 31st Jan 2018. Now, this can be a little complex, of course, and I'm sure that there might be some people who have questions about it. But what MProfit does is that it automates and accounts for the long-term capital gain grandfathering on its own. So Tanmay, you can just show an example so that it becomes a little more clear on how MProfit accounts for the LTCG grandfathering clause.
Sure. So as you can see, there is one stock, Infosys. There are multiple entries, and this is mainly bought before 31st Jan 2018. And then only the grandfathering is applicable. And so grandfathering is applicable if the stock is bought before 31st Jan 2018 and sold after 1st April 2018. So this is one example we have added. And if I go to the capital gain reports, so as you can see for Infosys, as it is bought before 31st Jan 2018, that is 23rd of August 17, and sold on October 23, the grandfathering is applicable here. Yeah, and similarly, we have an option in case maybe for accounting purpose or something, if you need to know the actual capital gain loss, we have provided option to see capital gains without grandfathering clause also. So in the customization option, as you can see, with grandfathering, if you select no, and if you generate the report, it will give you the actual capital gain you are making. Obviously, you won't be using this information to file the returns. But in case if you need to know the actual capital gain, you can just generate the capital gain report without grandfathering. So in this case, as you can see, as Atik explained, this will show based on the 860 rupees purchase price. What will be the gain?
Yeah, and just to one clarification that grandfathering is applicable on any shares that were purchased before 31st Jan 2018 and sold after 1st April 2018. So just to clarify that. But obviously, if you have any holdings today that go back before 31st Jan 2018, those shares will definitely have to undergo the grandfathering benefit, and you will have to compute your long-term capital gain accordingly. Yeah, Tanmay, you can continue.
Yeah. Yeah, and before we move to the other asset classes, let me quickly cover a couple of things related to stocks capital gain mainly. So in case of stocks, MProfit handles all types of corporate actions very accurately while computing capital gain, such as merger, demerger, split, bonus. So if I give you one example, in case of HDFC, HDFC Limited got merged with HDFC Bank. Okay, so we have already added the merger entry here for HDFC Bank. HDFC Limited got merged, as you can see. So HDFC Limited was merged to HDFC Bank on July 23. Balance shares after merger is 840 rupees. So merger entry we have already added, and then we are actually selling the stock. And if I show you, let me just change my preferences to show the zero holding assets also. So as you can see, HDFC Limited, this was actually bought on March 23, and the stock got merged with HDFC Bank on July 23. Now MProfit handles capital gain of this particular stock, HDFC Bank, very accurately. Meaning that even the merger has happened in July, it will still take the original purchase date when the original stock, that is HDFC Limited stock, was purchased. So if I go to the report section and generate the capital gain report, this will accurately consider the original purchase date of the HDFC Limited, not the merger date. This is as per the IT rules. So if you see HDFC Bank, I have sold, but it, instead of merger date, that is July 23, it has accurately taken the original purchase date of the HDFC Limited stock, which is March 23. And based on that, it will calculate the capital gains, whether it's a short term or long term.
And one thing to mention is that because MProfit automatically takes care of corporate actions, you can use the auto corporate action tool in MProfit if you're an MProfit cloud user. It will properly apply a bonus, split, merger, demerger, and dividend entries. And you don't need to worry about manually accounting for these corporate actions and adjusting the purchase date as per what Tanmay just showed you. It is properly handled by the system. So if corporate actions are complex, you don't need to worry if you're using MProfit. For these 5 corporate actions, dividend, split, bonus, merger, and demerger, we properly factor these corporate actions and provide capital gains accordingly. So, Tanmay, you gave an example of the merger. If you
Yeah.
wanted to also talk about demergers and how we handle them.
Sure, sure. So let me show you one example of demerger also. As we know that there was a demerger between Jio and Reliance. So again, as Atik mentioned, if you are having Reliance holdings and if you automatically apply the corporate actions, MProfit system will add the demerger entry accordingly based on the ratios, exit date, everything. So corporate actions you don't need to obviously enter manually. System can automatically add the corporate actions, and you simply have to go to actions and auto corporate actions to apply the corporate actions. So in case of demerger also, we handle capital gains very accurately. So Reliance Industries, if I search, you see there was a buy in 2021, then it got demerged, and then there is a sell entry. Basically, Reliance Industries partial quantity is sold. So if I generate the capital gain report, you will see the amount is accurately handled after the demerger. So there was a ratio of 95.32% to 4.38%. So Reliance Industries amount will be automatically, if you see the purchase amount, this will be based on the ratio of the demerger. Same goes for Jio also. If you're selling Jio, in this example, I have not sold the Jio, but if there is a sell entry, even that particular sell amount will be accurately handled after the purchase amount will be accurately handled after the corporate action, demerger. And based on that, you will get the capital gains. So MProfit provides capital gain after considering all types of corporate actions. So similar to merger and demerger, we obviously handle stock splits also and bonuses also.
Great, thanks, Tanmay. So I think I think the next topic we're going to be covering a couple of questions on the chat as well about buyback taxation. So I guess that's what we can talk about next. So how are capital gains and buybacks taxed? I think many people have this question. So Tanmay, if you want to
Yeah,
proceed.
sure. So buyback gains are properly handled in MProfit. As you know, after 5th of July 2019, if there is a buyback, that will not have any capital gain implications. So by default, if you generate any report and if there is a buyback transaction after 5th of July 2019, by default in the report, it will not be displayed. If you want to generate that, we have provided an option. So if I click on stocks, and in the customization option, we have mentioned that show only buyback gain loss after July 5, 2019. If I click on yes, it will give me gain loss information only for buybacks. So in this example, I have added Tata Consultancy Services, which was having buyback on Feb 22 and September 23. And there was one more, Somani Cements. There was a December 23, there was a buyback. So in this report, as you see, only buyback transactions are displayed here, whichever gain or loss they are making. This is important because you don't need there is no capital gains basically. So you cannot have this information to be included in the main capital gain report. So we have given the customization option where you can select if you want to see only buyback gain loss or you want to see other normal capital gain reporting.
So to answer the question, buyback gains after 5th July 2019, they are not liable for capital gain tax.
And again, buyback transactions can be added in MProfit, and we have supported it as a buyback transaction type. So this can be properly handled in the capital gain reporting, as you can see on the screen.
Great, Tanmay. I think we can talk about bonuses and how the bonus stripping rule has changed in the last year or two, and how MProfit handles that.
Yeah. So bonus stripping, once a popular tax saving strategy among investors, has now undergone changes in recent times, as you know. So if you are an investor, purchases shares within 3 months before the record date of the bonus issue, and then sell it basically within 9 months after the record date, any losses incurred during the sell will not be considered when calculating capital gains. So in this case, just to show you example, I have added Alcargo Logistics. As you can see, the purchase was in December 23 and bonus was declared in Jan 24, 2nd of Jan 24, which is within the 3 months. So purchase buy transaction is within the 3 months of the record date. And again, immediately next month, I have sold the asset. Okay, that is in the next month, Feb 24, which is again, as per the rule, it is within the 9-month cap. So if I generate the capital gain report, yeah, as you can see, Alcargo Logistics, it was bought on December 23, sold on Feb 24. And due to new rule, bonus stripping rule, there won't be any capital gain in this case. Because now bonus stripping is technically not supported. We can say that with the new amendment made to Section 94(8) of the Income Tax Act, bonus stripping is no longer allowed. So earlier it was allowed and you could actually book the losses against your capital gains. But now after 1st April 2022, this is not applicable. So if you generate MProfit report and if the particular stock is applicable for bonus stripping, you will not see any capital gain tax for that.
So just to clarify one thing here, that the bonus stripping rule change has happened since the financial year 22-23. Prior to that, investors could take the benefit. So if you are someone who has generated capital gains before, then MProfit accurately does provide you the bonus stripping benefit from a capital gain standpoint. From 22-23 onwards, MProfit has supported this new change in the bonus stripping rule, as Tanmay has shown you in the example, where your capital gain will not be offset when you for bonus stripping purposes.
Sure, Atik. So I guess we have covered almost all for
Yes.
equity capital gain, stocks capital gain. We can now move to the mutual fund capital gain report.
Yes. So equity mutual funds, essentially funds that have equity exposure of greater than 65%, they have the same tax rules as stocks for the most part. So your long-term capital gain will be uh, 1 year and above of holding, and it will be 10%. Again, capital gains up to 1 lakh rupees are exempt. And if you hold an equity mutual fund less than 1 year, you are liable to pay a 15% short-term capital gain tax. So it is almost the same as stocks, if not identical. And yeah, that should cover the equity mutual fund taxation. So we can move on now to other mutual funds. Now here is where it gets a little complex, and as some of you might be aware, rules have changed recently, especially for debt and hybrid funds. So we'll go into the details here of how things have changed and now how your mutual fund gains are going to be taxed for non-equity funds. So for any mutual funds that are not equity, they have an exposure less than 65%. If they are international funds, if they are fund of funds, ETFs, gold and silver funds as well, if they are purchased before 1st April 2023, emphasis on the word purchased, if they are purchased before 1st April 2023, you will get the previous benefit of indexation on the long-term capital gains. So, as you know, for debt mutual funds, for international funds, for fund of funds, for gold and silver funds that were purchased before 1st April 2023, short-term capital gains will be as per your income tax slab because those gains are added to your income. Long-term capital gains would be 20% tax rate with an indexation benefit. And this is for a holding period of 3 years. So any gains less than 3 years would be liable for short-term capital gain tax. Any gains greater than 3 years would be liable for a long-term capital gain tax. And this is specifically for purchases made before 1st April 2023. Any funds purchased after 1st April 2023, this does not hold true anymore. That has been the change which has come. And this was the previous older taxation rules for debt funds, for international funds, fund of funds, gold and silver funds. The tax category for such funds is debt, and that's why short-term capital gain tax is as per your income tax slab, and long-term capital gains tax would be 20% with an indexation benefit if held for 3 years and higher. Tanmay, if you wanted to give one indexation example that we could show. So,
Yes.
what is indexation? So I'm sure, I think some of you probably have that question. How does the indexation benefit apply?
So similar to grandfathering, where we have provided option if you want to get the capital gains with and without grandfathering. Similarly, we have provided an option for older debt funds to get the capital gains with indexation or without indexation. So you can see the customization option here. By default, it will be with indexation from now on. Same goes for grandfathering clause also. And if I generate the report, so you will get information, index cost, as well as capital gains here.
And just to explain, basically indexation is a mechanism which allows you to adjust the cost of a purchase of any security to account for an increase in inflation, so that you can offset some of that tax liability allotted to an increase in inflation, and that basically allows you to get an indexation benefit there. And now you can continue.
Yeah. So in this case, we have added one HDFC low duration fund, which you can see purchased was in 21 and there is a sell redemption in 24. So this is like a old, as per the old rules. So this is debt fund and it's actually showing long-term capital gain in this case. And as per the new rules, if this is purchased after the cutoff date, the 1st April 2023, then everything will be short term. That we'll discuss soon. But MProfit handles the cutoff dates very properly. The new rule is applicable from 1st April 23 onwards. If any new debt fund purchased after 1st April 23, it will be considered as a short term. And this, the one example which we are showing, this is actually purchased before 1st April 2023. So for this, the taxation or the capital gain calculation will be based on the older rules, which is 3-year LTCG.
So Tanmay, we can go back to the presentation 1 second.
Yeah.
So as you can see here, for any purchases that you have made and you're currently still holding those mutual funds, which are not equity in nature, you still are eligible for the 3-year long-term capital gain indexation benefit with a 20% tax rate. Things have changed after 1st April 2023. So today your portfolio could comprise some mutual funds which were purchased before 1st April and after 1st April 2023. You could have purchased the same fund if you purchased a debt fund before 1st April 2023 and after 1st April 2023. That same fund, two different transactions, could have different tax implications. So we have explained the pre 1st April 2023 to you. Now we'll explain the post 1st April 2023 to you. Tanmay, you can move to the next slide. So for mutual funds purchased after 1st April 2023, non-equity mutual funds purchased after 1st April 2023, there are two different rules, set of rules that can apply. One is if it is a purely debt fund with an equity exposure less than 35%, or if it's an international fund, or if it's a fund of fund, or if it's a gold or a silver fund, uh, in that case, if it is a pure debt fund or it gets categorized as debt, as you can see in this case, there is no long-term benefit. There is only short-term capital gain tax as per your income tax slab rate, and those gains will be added to your income. So the difference is that a fund which you held with less than 35% equity exposure, for example, which was a purely debt fund, if you purchased it before 1st April 2023, you are eligible for the long-term capital gain benefit. If you bought the same fund after 1st April 2023, that transaction will not be eligible for a long-term capital gain benefit. That will only be having a short-term implication. So that is the big difference for purely debt funds or for international funds or fund of funds or gold and silver funds. Now moving on to the next slide. There's one more case here where you have hybrid mutual funds. Now the whole concept of hybrid mutual fund taxation has now come in for funds that have equity exposure of between 35 and 65% that were purchased after 1st April 2023. For funds that were purchased after 1st April 23 with equity exposure between 35 and 65%, getting the hybrid categorization, there you are still eligible for the long-term capital gain benefit for holding it 3 years and higher with a 20% tax rate. Short-term is still as per your income tax slab rate. So if you have bought any funds in the current financial year after 1st April 2023 and beyond, if they are not in equity, they are not equity mutual funds, you have to technically check and see whether they are hybrid funds or whether they get purely debt treatment as per the previous slide. If they get purely debt treatment, if you can, Tanmay, if you can just go back. If they get purely debt treatment, they are only eligible for short-term capital gain tax, regardless of what the holding period is. Regardless of how long you hold that fund, you will have your gains when you sell that asset will be added to your income and taxed as per your income tax slab rate. There is no long-term benefit for these funds. But if that fund has between 35 and 65% equity exposure and is getting a hybrid treatment, you will be eligible for a 3 years and beyond long-term benefit with a 20% tax rate with indexation as well. Short-term holdings below 3 years will still be taxed as per your income tax slab rate. So currently, so in MProfit now, we have already updated our capital gain algorithms to support all of these different nuances and complexities where you don't need to worry about doing any of this manually. Regardless of when your mutual funds are purchased, if you're an MProfit customer, if you're directly syncing your mutual fund transactions from MF Central using our new MF CAS API, you don't need to worry about anything. All of this will be automatically handled based on the purchase date of your mutual fund transaction. So even if you have multiple transactions in the same mutual fund that have different tax liabilities, MProfit will properly handle them. If there are certain funds that should be categorized as hybrid and not debt based on their equity exposure, MProfit will properly tag them as hybrid funds also. If there are funds you're holding that are higher than 65% equity exposure, getting equity mutual fund treatment, we will properly also handle that as well. So from a user's perspective, even though we've given you the clarity on how these nuances work, you don't need to worry about how these things are actually handled if you're using MProfit. And if your CA is using, if your CA is computing capital gains, they can also use MProfit to automate some of these specific complexities in computing capital gains. So this change that has happened after 1st April 23, that has made capital gains slightly more complex for mutual funds. But from an MProfit perspective, there's no change in process for you. Tanmay, you can just go to MProfit and you can show which reports they need to download.
Yeah. So in case of capital gains, as I mentioned, capital gains ITR format, we have now added the new taxation properly. So you can see MF debt hybrid fund. So this is one report which will definitely help you to get the proper capital gain details for debt and hybrid funds, as Atik explained. And we are handling it properly, even if it is purchased before 1st April 23 or purchased after 1st April 23. And based on the new rule, it will be properly handled.
So right now, of course, you're not going to see debt mutual funds purchased after 1st April 23 or hybrid mutual funds purchased after 1st April 23 that are eligible for the long-term benefit, because obviously that will happen after 2026 and beyond. Right now, anything that you sell that was purchased after 1st April 23 will only be liable for the short-term capital gain tax, which is as per your income tax slab. There are a few more asset classes that we would like to cover, which we provide capital gains in capital gain reports in MProfit for. You have your sovereign gold bonds. So there also MProfit properly identifies bonds that are categorized as SGBs in your portfolio and gives you the short-term and long-term capital gain tax for these kind of bonds. The short-term taxation on SGBs is if you hold it for less than 3 years, the gains are added to your income and taxed as per your income tax slab rate. If you hold an SGB longer than 3 years, you are eligible to for a 20% tax rate if you avail the indexation benefit, and 10% tax rate if the indexation benefit is not availed. If an SGB is held for 8 years until maturity, then it is exempt from capital gains. So MProfit, as Tanmay, you can show again in the report how people can generate a traded bond report and choose whether they want to avail the indexation benefit or not.
Yeah. So similar to stocks and mutual funds, we have a separate category, as you can see, under capital gains ITR format, traded bonds, where in customization option, as Atik said, we provide option whether if you want to see gain loss with indexation or without indexation. So for sovereign gold bonds is 3-year LTCG, and if you have any other traded bond, that will be treated as a 1-year LTCG. If you're selling after 1 year, that will be treated as a LTCG, long-term capital gain. So in this case, as you can see, sovereign gold bond, it is purchased on Jan 22 and sold in Jan 24. So it is still coming as a short-term gain because it's a 3-year LTCG. And whereas other, if you see, the Indian Railway Finance Corporation, second bond on the screen, it is purchased on Feb 22 and sold in Feb 24. It is considered as a long-term capital gain. So we handle SGBs, capital gains, and other traded bond capital gains very accurately in MProfit, and you get the proper bifurcation and details from MProfit.
Yeah, thanks, Tanmay.
Yeah.
So I think that covers sovereign gold bond taxation. Next would be we cover is the traded bonds that are sold on secondary market. We'll talk about that, and they are listed on the exchange. These bonds, uh, again, have a short-term and a long-term differentiation. The short STCG for traded bonds is simple. If you hold it less than 1 year, you will be eligible for a short-term capital gain tax as per your income tax slab rate, because these gains are added to your income. And for holdings in traded bonds greater than 1 year, if they are sold after 1 year, then you get a 10% long-term capital gain tax without the indexation benefit. So there is no indexation benefit for traded bonds. Okay, so I think that covers traded bonds. It's simple. Uh, and then we can move on to REITs and InvITs. So REITs and InvITs, again, a new category of funds which is getting more popular. I think there are a lot of questions about how the gains and are taxed. So again, there, uh, your short-term capital gain and your long-term capital gain tax both are eligible here. The holding period for long-term would be 3 years. So if you hold a REIT or InvIT for less than 3 years, you would be liable to pay a 15% tax rate, short-term capital gain tax. And if you hold it for greater than 3 years, you would have to pay a 10% long-term capital gain tax. But again, your gains up to rupees 1 lakh are exempt from taxation. So MProfit, again, we do support uh, the import of REIT and InvITs from transaction statements, and we have a separate REIT and InvIT report which Tanmay can show you.
So as Atik said, we provide a separate capital gain reports for invites and REITs, as you can see.
And yeah, it properly handles the long-term and short-term aspects of capital gains as well. Great. So I think that brings us to the end of the asset classes that we wanted to cover, that we provide capital gain reporting and MProfit for. The one thing we can talk about, Tanmay, now is how people can use MProfit's unrealized gain loss reports for the purposes of tax loss harvesting. So as you know, tax loss harvesting is a mechanism that allows you to book your losses in the current financial year to offset gains made in that particular financial year. So the purpose of this is to optimize and reduce your capital gain taxation liability, and a lot of people are doing this. But MProfit does provide a report that allows you to see which assets can be harvested from a tax loss standpoint to optimize your capital gain liability in any financial year. And because this financial year is coming to a close on 31st March, I'm sure there are many of you who are actively exploring how to optimize your own tax liability. And for MProfit, if you're an MProfit user, you can use our unrealized capital gain report to do so, because the unrealized capital gain report is a report in MProfit which shows you what your notional capital gains are on your current portfolio if you were to exit at current valuations. So just like you have a realized capital gain loss report for booked profit and loss, MProfit provides you a notional P&L report on your current portfolio to show you what your unrealized gains and losses are. And then you can show the report now.
Yeah, so on the screen, as you can see, I have already opened unrealized capital gain loss report. And the first asset you see, HDFC Bank, it's actually making a loss of 91,000 if I actually sell it today. So you can actually refer this report to see which particular stock is making gain or loss, whether that to short-term loss or long-term loss. And accordingly, you can basically set off against the income you are making uh, to reduce the tax liability. So in this case, the first HDFC Bank, if I sell it today, I'll be making 91,000 loss in this case, based on the current NAV, current price.
And I think that brings us to the end of the webinar. Thank you everyone for your time. We hope this has been informative. And as I said, we'll do more of these taxation capital gain focused webinars in the future as tax filing season gets underway.